Man, oh man, what a day, what a day. Boy, great job today, guys. I don't think you could have scripted that any better today. That beautiful run higher, grabbing those bear traps on the way up, and then dumping it back down this afternoon. Man, oh man, well done, well done. I love it when a plan comes together. I know a bunch of you guys and gals had your biggest days of the year today, so congratulations on that. But now, Back focused again. We got one more day left this week. I don't care how much money you made today. We got to get back to focus, stay disciplined, because we have a big non-farm Friday coming tomorrow, and we have a lot to cover tonight in what might be one of the most important videos of the year so far. We have a lot to cover, a lot of great trades setting up for Friday. As always, I'm going to cover my favorite trades in tonight's video that will give a game plan to make some money tomorrow. Before we get this party going tonight, we're going to cover everything on the video tonight. Before we get started though, make sure you subscribe to our channel, that way you don't miss tomorrow night's video upload. And if you guys enjoy the video tonight, do me a favor, as always, hit that like button, give me a shout out in the comment section below. Thank you so much for tuning in and supporting this channel. But enough of the intro, right? Non-Farm Friday could be another fantastic day tomorrow in our trade room. So where are the best trades setting up for Friday morning? Well, boy, everything's bearish right now. You probably don't need me to tell you that. And I think everybody probably is on the same page, right? I mean, is there anybody watching this video right now that isn't trying to short the bounces here for tomorrow? I think everybody is probably trying to short the bounces, right? Yeah, well, that's the problem. Tomorrow we have one of the biggest news reports possibly of the year so far, because we know it's a big kind of a turning point or decision point for the Fed's announcement later on here this month. My favorite trades for tomorrow are all going to be bull traps. Okay, bull traps. Bull traps are the name of the game for tomorrow. But here's the deal. I think everybody assumes this market's going lower. And when everybody assumes the market's going to do something, something's probably going to surprise us here for tomorrow. So tonight, we better be ready for some shenanigans tomorrow coming out of this non-farm payroll number. I have 3 different scenarios, and we'll talk about them in detail here tonight. But 3 specific scenarios, all 3 of them will use bull traps in different ways. But again, it seems like everybody is on the same page right now, and that should concern us just a little bit going to that big news here for tomorrow. So we'll talk about bull traps, but different ways to use them throughout the video here tonight. It's going to be a masterclass for you guys here tonight. Before we jump in though and talk about each of these trades for all 3 of these markets, let's make sure we all get on the same page for tomorrow, because again, tomorrow is not your average Friday. It is Employment Friday here, non-farm payrolls. We know the Fed has an announcement coming out, 22nd, 23rd of March, something like that. And we know the non-farm payroll number is going to be one of the key decision points. Also the CPI number coming out next Tuesday. So this is a big deal here for tomorrow. I think everybody assumes this number is going to be better than expected. We've already heard from things like the ADP employment number, about how the red hot jobs market. Powell talked about it in his testimony earlier this week. And that is probably one of the big reasons why the market dumped so far this afternoon. I mean, we talked about this last night. We expected that reversal off the high. And man, oh man, great job on that this morning in the trade room. But we definitely, we have to assume, or at least anticipate, that this big move down this afternoon may have already priced in what is expected to be a pretty good number coming tomorrow. And this is where the potential surprises will come in. One of the scenarios that we'll talk about tonight, 3 scenarios. One of those scenarios is we have to assume the market has priced this in, and it won't matter what that news comes out tomorrow unless it's a bad number. Okay, and we'll talk more about that as we go. But be aware tomorrow on a non-farm Friday, the key is to let that news come and go, let that volatility come and go. We're going to prep some scenarios here tonight. My job on a Friday overall is to get into trades as early as I can and then try to leave a runner, because Fridays love to run. They love to run into the afternoon. So employment number comes out 8:30. by 9:30, 9:45, right? Once that dust settles, we'll be looking for some of the best entries tomorrow morning in the trade room. So just keep that in mind, right, for tomorrow. Also, I should also bring to your attention too, I mentioned this last night in the video, there'll be no video newsletters next week. So be aware of that. We'll come back on March the 20th. Don't forget, we got daylight savings time is this Sunday as well. So don't forget to move your clocks, right? Spring forward by 1 hour on Saturday night into Sunday. And next Friday, next week, we have some rollover dates loading up in the third week of March. So keep that on your radar for tomorrow. So let's cover those three scenarios and how we're going to use some bull traps to make money tomorrow. Guys, I'm going to go over each one of these charts and talk about my favorite trades on S&P, Nasdaq, crude oil. If you like making money, I would definitely watch all the way to the end because every trade I talk about tonight can be applied to your favorite market. Let's grab the S&P first, over the Nasdaq, and we'll wrap things up on the crude oil. First of all, this is a tick chart. All of these are tick charts here tonight. You can see the exact time frames in the upper left-hand corner. That is the 21 EMA, the exponential moving average. And as always, if you go down the description of the YouTube video, I'll include some higher time frame charts, some 60-minute charts, some 4-hour charts. They're newly updated since this big move today. And they'll be a good companion along with the charts you're seeing in front of me. So if you want to see a bigger picture, more of a bird's eye view, a bit of the lens I'm looking at these markets through, definitely check out those links in the description for the higher time frame charts. Now, what's the most important factor? The most important thing is it's a very strong, it's a very large move going lower. Anytime we see a strong move in one direction, we expect a pullback, we expect a retest of that low, and then potentially a reversal off of that low later on in the session. This is kind of the general game plan that I would imagine that most people are looking for here tomorrow, right? They want to short that pop. They want to bring it right back down to that low. We've been talking about shorting the bounces, et cetera, this week. So ultimately, my favorite trade for tomorrow is I'd like to get this thing to pop up. I'd like to trap in some of the buyers, right, into some of these resistance areas, use their stops ultimately as fuel for that run back down again. Once we get back to that low, I can then start looking for what I call double bottom reversals, using again stops as fuel for a pop back up again. This is kind of the sequence I'm looking at here today. Now, again, this is what I think everybody expects for tomorrow, which is why you should be very concerned about that because, again, when everybody expects the same thing, we have to be ready for it. So this is definitely one of the scenarios we'll talk about here for tonight. I also want to anticipate that the market has priced this news in, which means we may end up going into a nasty range tomorrow, right? This big move may have already happened. They may have got it out of the way ahead of that news for tomorrow. And I also want to be ready for if we do get that big drop going lower, right? If we do end up getting that big drop going lower, what is the game plan if the market rifles lower here? Because the last thing I want to do is get caught chasing it. So we're going to cover those three scenarios here tonight. I'm going to start with the move going higher here. The key going higher, there are really three different ways I'll be looking to short these bounces, and all three of them are going to use bull traps. The simple one is, as we make that run going higher, really just like we saw today, as the market made that strong run up, they pull back, they try once, they try twice. I like to use what's called the 2-try rule whenever it comes to picking these really big, deep pullbacks to this or these big bounces. Because what happens is it gets all the buyers trapped in, and you can see what happens. Once their stops get hit, all those stops get hit, and the market usually sells off right back down again. There's a couple variations of this that you want to be aware of. So, for example, the simple one is we go up, we run up into key areas of resistance. Again, I had put this earlier, this kind of measured pullback pullback on here as well, right? So really anywhere up around this area here. And again, this might be a bit violent, right? Because again, the news comes out tomorrow, it may really launch and go higher. So as it starts to really rip going higher, I'm not trying to pick that top. I'm going to then let the buyers do most of the work for me. Let them come in and try to buy it. Let them try to buy it. And then once I start seeing that, what I call a two-try failure, it's a more advanced failure pattern, like the failure pattern we teach in the free trading course, right? It's a two-try failure. It's just simply two tries, right? Like the one I teach in the free trading course. And then once we see those two tries here, then I know where stops are, and I can literally sell right into stops, right? So just like a failure you guys are learning in the free trading classes. There's one more variation of this that you want to be aware of. It may really pop up, and if it really pops up strong, they may pull back to that moving average, and they may just simply buy the pullback and retest off of that high. That's perfectly fine. We call these double top reversals. It's the same basic idea. Think about a bull trap. Think about how we can use buyers and their stops as fuel as they pull back again now. Let them try once, let them try twice. Now pay attention to this one. This is one of my favorites. When they retest the high like this, again, we know where stops are, right? We know where the buyer's pain is. We have that strong run down. We're anticipating a move back to that low. So we can sell now, again, using a failure pattern, like you guys are learning in the free trading course. And then as it goes lower, what you want to look for is a new channel. So I draw it nice and tight off the lows. I bring it up around that high. And then like I always say in our free video course, right, the first test is the best test. And again, we know where the market wants to go. It wants to go back down to retest that low. I like to get a bull trap right above a prior swing, like I'm kind of showing you on this one. This could be a bull trap, like this example. It could be a buyer failure. It could be a pullback combo. It could be a strength trade, right? Everything part of the price action cycle, which you guys are learning in the free trading course, which reminds me, if you haven't learned the price action cycle yet, if you haven't learned these entry tactics yet, I know a lot of you guys are learning those right now and making money with it on your own account. But if you're here for the first time, if you haven't taken the free classes yet and learned all these entry tactics, I'll put a link up there for you in the upper right-hand corner. Grab that link, take the free trading course. You're going to love it. The strategy you'll learn in that free video series will teach you a simple trick to know exactly where the best winning trades are going to be each day. It's remarkably simple, that trick I'll teach you guys. And I'll also give you 4 different entry patterns to help you start making money. That way you can capitalize on some bull traps and some first tests or the best tests. So grab that link, take the free course. It's perfect for someone trying to make the jump into full-time trading, and you'll learn all about finding channels, trapping in the buyers, and running back down. There's a lot of examples of setups like that in that free course. There's one more variable that I want to go over here with you guys, and then we'll talk about the game plan going sideways. We'll talk about the game plan going lower, because again, we better be ready for all 3 of these scenarios here for tomorrow. Now, the final one is the one that we really don't want, right? But you got to be ready for it. It's a V-top. Sometimes, right, most of the time, we're going to pop up, right? We'll get the buyers trying a couple times. We can sell into stops. We can find those channels, right? We can grab that reversal. Yeah, sometimes we don't get that. Sometimes, especially during these really big moves like this, sometimes they'll pop up and they'll literally V-top. And because there's so many bears up there, there's so many bears coming in, it just gets crushed, right? And runs back down again. If that happens, the key is don't chase after it, right? If it pops up and V-tops, watch for this. Watch for the grind going lower. Find a channel off the low, pin it right up around the high. And again, you want that first test. My favorite trade is usually a trap high right above a prior swing, up around the first test of that channel. Again, we're trying to go back down to retest the low. Make sense? Okay, so keep those 3 scenarios on your radar if we get a really sharp move into this news event coming tomorrow morning. Now, one more thing I want to kind of remind you guys about. If we end up going up, we trap those buyers in, and we find our way all the way back down to retest the low. Can I buy off of that low right now? I can, because the objective is to retest the low. The problem though is what? It's momentum, right? Momentum will be the big problem on this. And so good place to be a buyer. We expect all professional sellers are taking profit at that low, but this is where you're going to want to go out and find what I call a crown reversal pattern, right? We're overall very bearish. I got to be very selective with how I pick a bottom on this, but I'll tell you, you find one of these patterns, it's a 2-try failure with a bear trap. Okay, traps are going to be your best friend here for tomorrow. So we trap in the bulls, right? Bull trap, buyer failure off the high. We run all the way back down to that low. We're taking profit at this low because that's the objective in this situation. And now all the rookies come in. Right? Professionals, they're selling high. The rookies come in and they're selling low. The key here now is because we're so bearish, we have to get a bear trap. So watch closely on this one. You want the bears trying once. You want the bears trying twice. Again, I need their stops, right? I need their stops to be the fuel to get this reversal. The problem, though, is it's a very bear market. So I have to pick my spots really wisely. And to do that, we want a bear trap, a trap below that prior low. This is pretty much the only way to safely buy that reversal. And again, we only do that after we make that big pop up, right? And then back down to retest the low. We do this because everybody who's sold high like this, they're taking their profit down here. These are the rookies down here. Right? These are the inexperienced traders, the low capitalized traders, the unable to defend themselves traders. And if we can get that crown reversal, which again is nothing more than a 2-try failure with a trap low on. And again, I know I'm talking about traps a lot, but trust me, when you take that free trading course, you will soon realize why traps are your best friend to make money each day. And again, well, I shouldn't say that. Where does it want to go from that point? After they grab that low, or if we can get that crown reversal off the low, where do you think the market wants to go? It'll want to go right back up into this area here. A lot of times these will turn into ranges. And so as we go higher now, right, we go higher, the buyers come in, they foolishly chase it. We let them try once, let them try twice, we sell back down again, right? This could easily turn into a very big range and plenty of ways to trap traders in, use stops as fuel. Again, the one you want to look for most of all, is that deep pullback originally. We may not get that crown reversal, but be on the lookout for that. And if we really get lucky, if the trading gods are looking down on us here tonight, right, it'll get that bounce back up and another one back down again. I would be very pleased if we saw that third setup tomorrow morning before the end of the day tomorrow. So keep that on your radar. Again, that's if we get that deep pullback. Now, let's go to the NASDAQ now. Let's talk about if we go sideways in a range. This is very, very possible here for tomorrow. We may end up going sideways in a range here because, again, we may have already priced this stuff in. I want to talk about a range, and I also want to talk about if we go lower here as well. Now, you'll notice in the NASDAQ, it's the same basic idea. It's a very big move down. I would expect everybody is looking for that deep pullback, trapping those buyers, and back down to retest the low. It's pretty much the same exact scenario that we talked about a moment ago on the S&P. What I want to cover here right now is I want to cover here if we go sideways. We may, and I hate to say this, we may get a bee's nest tomorrow. The market may not give us those big moves. I would expect it to, but again, I think everybody expects that, which is why I'm a little bit suspicious of my instincts, right, for tomorrow. I always get a bit nervous whenever I'm on the same page as every other trader I'm seeing on YouTube right now. So we have to anticipate we may get a bit of a grinding move tomorrow if nobody's surprised by the news that we saw here for tomorrow. Now, when it comes to ranges, okay, when it comes to ranges, what you want to remember is that ranges act like magnets and ranges love to rotate. Okay, so if we do see a range overnight or for some reason there's a range develops after news tomorrow, how do we use bull traps? So here's the trick to this one. If we have a range, we're probably not going to see a very big pullback. Okay, again, if it's already priced this stuff in, if we get stuck in a range here, we're probably not going to get that deep pullback. I hope we do, but we may not. What is the problem if we don't get that deep pullback? We're very, very low right. Remember, it's a big move down. The bears really want that deep pullback to sell really high, right? They want to sell as high as they can. It's a huge move down today, right? To put some meat on the bone, right? They're going to get that high price up. So if we don't see a deep pullback, we have to anticipate that traders are not going to, well, they're going to want to sell as high as they can. And so if we get a range here tomorrow, and again, this goes to the S&P as well, if it pops up and all we get is a shallow pullback, and again, you keep an eye on like these areas right there, right? Obviously, this range here on the S&P and the Nasdaq, same idea. If we pop up and all we get is a shallow pullback, you want to think about bull traps. Now, remember that crown reversal I talked about on the S&P to buy? Similar. 1 try for the buyers, 2 try for the buyers. You want that trap, okay? We talk a lot about this in my trade room, about how shallow pullbacks in a big move down, you want traps, right? Again, you'll notice this is a slightly different variation of it, but it's the same basic idea. If the market begins to go sideways and kind of a bee's nest down here, as I call it, all we get is that shallow pullback. And chances are what will happen is this thing will sit, right? It'll sit. The news won't do much to it, right? It'll sit, and all of a sudden that range becomes a really, really big magnet. If that range builds and builds and builds because the news has already been priced in tomorrow morning, watch that shallow pullback. Don't get too aggressive on it, but look for the entry with a bull trap above that high. That will ensure that we're selling as high as we possibly can, right? It's the best of a not great situation, and that's why sellers will use it for their entries. A lot of professionals will do is they'll take small little nibbles and build into their position as it goes higher, right? It's oftentimes the only shot that they get is that little trap high, that bull trap. Now, the next thing you want to keep in mind is where does the market want to go now? This is where you have to learn to manage these types of trades to squeeze as much out of it as you can, because again, it's not going to be a very big pullback. The entry is that trap high. First target, back to retest the low, always. Second target, this is where you want to understand rotation. The amount above the range will oftentimes be the amount below the range. Now again, tomorrow's a Friday, so you want to get in the mindset of try to leave a runner. This is a great place for a runner target is the equal or the symmetrical, what we call a pendulum swing off of that high. Okay, so in this scenario, nobody's surprised by the news tomorrow. The news grinds and goes sideways. That range, the longer it stays there, becomes a big old magnet. Again, we'd love to get the deep pullback, 2 tries back down. We might not get it if all we get is that shallow pullback, and you see them struggling, right? That bull trap above that high, target comes off at the low of the range, right? Second target comes off at the pendulum. And if you play it right tomorrow, if you have a big enough position, leave that runner, right? Leave that runner to see how far that will go there for tomorrow. I like that range play. I have a funny feeling that might be what we get tomorrow. Who knows, right? Who knows? We'll see what we get. Now, let's talk 2 more scenarios. Okay, the easiest one now is, well, I shouldn't say easiest one, but let's say now we keep going lower. Right? Because, this could easily happen, right? The news comes out, it's better than expected. It doesn't surprise anybody, but because everybody's so bearish, we kind of grind down, right? We grind down. If it grinds down, nothing really changes. But now all of these prior swings become your best friend. We still want to get that deep pullback. Trap in 1, trap in 2, right? Buyers get trapped and back down again. Right? If it grinds down, and don't be surprised if it goes into a trading range down here, right? Grinds down into a range. What do? We mark off resistance levels overhead. Again, we'd love to get that deep pullback, but we may not. We may not get what? We may get a shallow pullback. Shallow pullback, bull trap, back down. So keep that scenario on your radar. That's one of the it's kind of one of the third scenarios here for tomorrow. The final scenario, of course, right, is going to be that big move down on the NASDAQ right now, and you'll see this in that 60-minute chart I posted in the description of the YouTube video tonight. You'll see there's a really big objective down here at the 11,832. The S&P is a similar spot. The NASDAQ, though, stands out like a sore thumb. Remember this move right there. Okay, that move right there is going to be your best friend. If we make a big move down tomorrow, or if we kind of push lower, you want to be thinking about moving things down. Okay, so kind of think about that measured pullback as we go. If we end up really accelerating going lower, right? If we really accelerate going lower, if the market, again, news tomorrow really punches and runs lower, now what I'm doing is I'm looking to sell that deep pullback again. But now we go out, we mark that new low, right, off that high. Makes sense? Again, I find this measured pullback. I call them measured pullbacks. I start projecting that off that low, and that helps me now build my levels up overhead. The one thing I don't want to do is, if it rifles lower, I don't want to chase it. All right? I want to be ready for that range down here. If you go into a range, again, shallow pullback, trap, right? Deep pullback, 1, 2, back down again. It's a relatively simple game plan, but we have to make sure though that, the reason why I do these videos is mostly for me to kind of rehearse this stuff. That way I'm mentally locked in tomorrow when we do it together with all of our students, right? So again, running lower, just be careful if it goes lower like this. Wait for that pullback, that deep pullback. If it goes into a trading range, be aware of that range. Trade that range rotation with that shallow pullback. All right. I think I've got all of that covered. Again, if we end up rolling lower strong, nice bounce back up, right? Find those steeper channels now, right? Find those prior swings, trap those buyers in, back down to retest the low, and then again, crown reversal, right? Crown reversal off the low, like I mentioned before. All right, guys, I like the game plan here for tomorrow. Now we wait, right? Now we wait and see what surprises this non-farm payroll number has in store. Now, let's wrap things up tonight on the oil. Oil is a great chart for us tonight because if you understand the basic principles of the last two charts, you're going to see how we're going to go out and apply this even a little bit differently now on crude oil. The same basic idea comes into play. We're still going to use bull traps, right? It's still the same general principles, but you will see here on this chart, it's a little bit of a different spin to it. So what's the most important factor here now on this chart? It's a very strong move down, right? Very strong move down. Anytime we see a strong move, we expect a pullback and a retest. But do you notice something that's very different on the oil chart? Look where we are in relationship to that prior low. Look where we are now in comparison to the NASDAQ, right? The NASDAQ is, look at how much I call these, how much more convincing that breakdown is, right? The NASDAQ can pull back and use that area as a level of resistance. So can the S&P. The oil doesn't have that same luxury. Okay. Now it may go lower, and we'll talk about that in a moment, but this is a great example of what we talked about. I want to get a deep pullback. I'd like to go out and find this channel off the low, off that high. My favorite trade for tomorrow would be get that deep pullback, trap those buyers in, and right back down again, right? Again, it's the same basic idea I think everybody has in their mind right now. But here's the challenge, though. We may not get that deep pullback. That's a hell of a move down, right? That's a very strong move down. We may have a sharper channel here coming down. A lot of times they'll kind of grind down and create these stronger channels here. In that situation, though, my concern now shifts now to this area right here. So we can be careful on this. The best scenario is we go a little bit lower, right? We go a bit lower, and then all of a sudden now we can use those prior levels, get that deep pullback, and back down again. If we don't go lower here, though, then we have to go back to that. What was it again? Shallow pullback traps, deep pullback failures, right? So think about this now. We may not get that move up to the high of that channel. I'd love to, but we can't guarantee it, right? We can't guarantee it. We may also go sideways here in a trading range. So whether or not we go into a trading range down here, or if we sit here and pull back right now, this shallow pullback zone, I can sell this because, again, it's a very strong move down, but I have to be worried about where I am. I'm now above that prior swing. This is exactly where a shallow pullback trap entry is necessary because sellers are going to be trying to sell as high as they can. So shallow pullback, and again, this could be off that channel high, right? Stuff like that, right? So we run up into that channel, we get up into this key area of resistance. It's a relatively shallow pullback, 1, 2, trap high, and back down again. Again, if we're lucky, we'll go all the way up off the news tomorrow. We'll get one of these bad boys where it comes up, the buyers once, the buyers twice, and run right back down again. Like I said, I mean, you really couldn't have scripted this whole thing any better here today. Very well done today. I know a lot of you guys made some pretty good money today, so well done on that. If we get that deep pullback, right, now again, strong momentum, right? But overall bear bias, give the buyers the benefit of the doubt. Let them try a couple times. Use those stops as fuel. Look for that failure into that new channel, and we're riding this thing where? Back to retest the low, down to that 75, pretty much a barrel support level below us. If we really rip higher, V-top, come crashing back down again. Same thing, pop and grind channel. Like I mentioned before, find those prior swings and don't miss that first test off the high of that channel, right? The big variable right now, though, is if all we get is a little, again, there could easily be a channel coming down right there. It's a great sell zone right there between 64 and 14 there. We may only get that shallow pullback, and that's where you're going to want to see that bull trap. Now, like I mentioned before, kind of the best case scenario here really would be if we keep going a bit lower, right? Get a big bear objective on oil, then at 73.80 right now. If they were to either pop and keep grinding down, that would be great. Draw that trend line off that low, bring it up around that high, right? Think about the size of that pullback into this pullback area. That'll help you build that sell zone up overhead. But if we do see a pop and grind going lower, now we can be a lot more aggressive because now we have that prior low to use to help us, right? So again, same thing, go mark up some of these prior swings, get above prior swings, that's where traps live, get above the moving average, that's where failure patterns live, right? Get those pullback combinations off the moving average and back down to retest the low, right? The only other scenario would be, right, if we were to literally just rocket going lower. If it rockets going lower, now we simply connect those lows. We bring it up here. We project this area to build that sell zone. We anticipate, at this point, if it races lower like that, we anticipate some sort of range down here. And again, we'd love to get that deep pullback, 1, 2, back down. But again, we may not get that, right? If we get stuck in that range down there, all we might get is a shallow pullback with a little trap. Right? Again, I wouldn't be surprised if this news kind of drags us into a bit of a range tomorrow after that big move that we saw today. So keep that on your radar as well. The key is if it runs lower, we wait for that pop up. We use those larger channels, and again, pop it up, trap those buyers in. Use our stops as fuel, bull traps again, right? And then back down to retest the low. If we get stuck inside that range down there, right? If it ends up being a range down here, it's the same basic idea, but be at that point, be prepared for a shallower pullback and that bull trap back down again. All right, guys? Now, I know I'm just scribbling the chart tonight. I know we're simply drawing this stuff out. But again, we want to plan our trades. That way tomorrow we can trade our plan. It gives me a lot more confidence, a lot more clarity, a lot more discipline, patience, right, to wait for the right trades tomorrow. And hopefully this helps you guys make some money tomorrow for trading on your own. Don't forget tomorrow morning, though, 8 o'clock Eastern time in our trade room. Don't forget, no newsletters next week. Believe me, I hate to leave you guys hanging next week. And we'll come back that fourth week, that 20th, week of the 20th of March. Hope you guys learned a bunch here tonight. Hope I'll see you soon in the morning trade room, 8 o'clock Eastern time. If you want any more information about the free trading courses or the membership classes, the trade room sessions, all the included links in the description of the video, don't be afraid to call the office if you guys have any questions. The easiest way to get help is to call the office and ask for help there or use live chat on the website. All right, guys, I'm going to wrap things up here for tomorrow. Enjoy your daylight savings time this weekend. It's kind of a bittersweet weekend, right? You lose an hour of sleep because you spring forward, but you get an hour at the end of your day. So have a great rest of your day out there. Hope I'll see you tomorrow morning in the morning trade room. Be careful around that non-farm payroll number. And as always, thank you guys so much for watching. Be well. Be nice to each other and be here next time. Adios, amigos. Bye-bye for now.